Excited for our all-star panel of sports industry leaders, each of whom is a team owner and an investor. I call them all-stars because I've had the privilege to interview each of our esteemed speakers over the course of my 7 years as moderating this panel on investing in sports. But today is the first time that I have all three of them, Steve, Gerry, and Mitch, on the same stage. We'd like to discuss skyrocketing valuations, evolving ownership models, and increasingly global investment opportunities. Steve mentioned, 360 million was how much you paid? Now, if you think about valuations, over the last year, we've seen record deals across leagues, including for another basketball team, the Phoenix Suns, selling a record $4 billion, and the Commanders from my hometown potentially fetching a multi-billion-dollar price tag starting with a 6. So Gerry, what's driving these soaring valuations, and are we in a bubble? How do you value team assets?
Well, there's a lot there in that question. We're definitely in a bubble, but it's not something that's new. I think we've been in a bubble for some time. Having said that, I remember when the guys bought the Bucks at 550 and Tony bought the Hawks at 850, and I remember at every one of those transactions calling them and saying, "What are you guys doing?" I mean, I think I even said to Fascitelli, I said, "Can you imagine the Bucks being worth $1 billion if you just want to make a double?" And look at where we are. So on the one hand, I say that we've been in a bubble for a while. On the other hand, it's defying Darwin. I mean, it just keeps going up, right? And so the question really then is, well, why is that? And what's happening that I'm not crazy about is there's this facile notion that I'm starting to hear, and it's always around this concept of sports as an asset class. And I would tell you that, at least from my perspective, the moment you start talking about sports as an asset class, everybody's got to stop for a minute and just say, hold on, what's going on? And the reason for that is that I hear these very facile notions of it's non-correlated to the market, relative to the S&P, the growth has been differentiated, valuations keep going up, and yet when you look at the analytical rigor around these things, I mean, the equity research in sports is Forbes magazine, right? And it's kind of like LIFO. It's like you look at the last trade and you put a markup on it. These things now that may have worked 20 years ago, 25 years ago. I think today these are multi-billion-dollar live event entertainment assets, and I think there's got to be a little bit more rigor. This concept that these things trade as multiples of revenue, I also think is somewhat concerning. I think these things should trade as multiples of cash flow, and that's the investment thesis ultimately that I try to apply when we look at these things, which is can you work your way into the money on an overpay, and it's got to be cash flow driven.